Welcome back. Another fucking course video. We back at it already. We got them daily uploads. We coming to you with this course hella fast to get yo ass profitable. So let's run it. Alright. It is Unit 2. We are starting up Unit 2. Now listen, Unit 2. Unit 2 is a big one. It's a big ass unit. But we're starting from the ground up. What is the Nasdaq and what is the S&P 500? All right, so let's just start simple. All right, because what are we trading? You gotta understand what we're trading and why we trading it and what we doing. Because if you don't know what we doing, then how you gonna know what we doing? You know what I mean? So like, let's just start off. What is the Nasdaq? The Nasdaq stands for something that I forget. It's like the National Association Securities something and quotation system, something like that. And then the S&P 500 is the Standard and Poor's 500. Nasdaq, it's like one of the top. It's the top 100 tech companies in the U.S. and the S&P 500 is the top 500 U.S. companies. And they're both indexes. Indexes, what are they? Indexes, you buy them you buy an index to buy 500, like if you're buying the S&P 500, you're buying 500 companies at once, right? It's the best index, the S&P 500. If you want yearly returns, just put your money in the S&P 500. It's almost certain to go up in the year. You know, we've had a few years it's gone down, but if you hold it for 10 years, I guarantee you it's going to give you some profits. But that's long-term investment. That's not what we're here to do. What are we here to do? Buy and sell within the day. So let's hop into some futures. All right. So we got this right here. All right. So what you're going to do is you're going to hop over to tradingview.com. All right. You're going to create a little account. I'm going to close out my messages. Go create an account. You see, I got the premium, but you don't need any of these. You don't need the premium. You don't need any plan to start out. If you want live market data, you're gonna need a plan, but right now you don't need none of that. You're not gonna be trading live. You're not gonna be forward testing. I mean, you can forward test if you want, but like you don't need any of this any plan. You could use the free plan. So what you're gonna do, you're gonna be met with something like this. It's gonna be a nice page once you log in. You got the S&P 500 and you got the Nasdaq. All right. So I have a watch list right here, and it's got two things: MES and MNQ. So before we even dive into that, let's just hop into what futures is. All right. So futures, this is the Nasdaq. If you go to any index, any stock, anything, you want to click overview and hit full chart to launch the full chart. Now this is TradingView. I'm not logged into my account. So we're just gonna leave it like that. Alright. So let's take a look at what we have there. Your first time opening TradingView and you're like, what the fuck am I looking at? Because that's what I was. I was like, what the fuck am I looking? I have a Discord DM. I'll pull it up if I can. If I can't, I don't give a fuck. But the thing is, I had a Discord DM way back when of me opening TradingView for the first time, being like, what the fuck is this? And that's your reaction right now. Yours isn't gonna look like this. Mine, I have this dark theme. You got all this stuff, but you know, to get you set up, the core things you want to do first, you want to hold on right here, right down here, you have your time zone. You want to change that to UTC-4 New York. If you're in New York, you can change it to your time zone. But to make it simpler, put it on the New York time zone so I can explain to you what times you want to trade, what times, or all the sessions and everything, right? So we're gonna put that at UTC-4 New York. Let's see, what am I teaching you guys today? What are futures? So futures is trading contracts. Okay, so you guys aren't trading you guys aren't trading a company, you guys aren't trading a single stock, you're not trading options, you're trading a contract. Now, what does this contract do? Basically, as a futures day trader, you are buying or selling a contract that says, I think that price is going to be here at this time. And if you're right, you make bank. All right, so that's the goal of the entire strategy, to predict the market correctly, not to make money, not to get bank, not to get payouts, is to predict the market correctly on a day-to-day basis. All right, so this is the NASDAQ. All right, we trade two things, NQ and ES, but we don't actually trade that. Now, let me explain why. The market is measured in points, okay? So you can see that this distance is right here, 83 points, all right? That is how much the distance is. Oh my god, my hair is cooked. Oh god. All right. You guys just don't worry about the hair. You can let it be cooked. All right. Holy shit. All right. Anyway, one sec. Unlocked. I promise. All right. Check this out. So the market is measured in points. What does that mean? Any distance, this price moving down, this move down of price, boom. That's 59 points down on the NASDAQ. All right. So now if I measure the same leg, or actually, let's go to ES. Don't look at all those lines. If I go to ES, this is the same leg down, which is just 59 points on the NASDAQ. It's going to be only 12.5 points on the ES, which is the S&P 500, right? So what does that tell us? When we buy a single contract on, let's start with the NASDAQ, right? Let's go to NQ. When we buy a single, if we buy a single contract, so let's go to the replay, start new, let's go here, right? And let's say we sell one contract, right? We're selling one unit, one contract on the NASDAQ, right? Each point it goes down when we're on NQ1, it's going to go down $20. We're going to make $20 profit because we shorted the market. So we make money if it goes down, right? So this right here, $735, we entered one contract. So that means that the distance down is 36.75. So 36.75 times 20 is going to be 735 because that's how much profit we would make. And obviously, since I'm the best, we hit this trade, instant take profit, right? Now, on ES, it's a little different. So instead of $20 per point, we have it at $50 per point. All right. So if I took a little short here, put in one contract, sell. If I put a take profit down, this is what, $200 profit. And if it's $50 per point, that means we're going down 4 points, right? So this distance right here, if I can do this, is around 4 points. You see if I put this correctly, but yeah. So you can see that on ES, every point is worth $50, while NQ, every point is worth $20. All right, so I hope that makes sense to you. Now, moving forward with that, you cannot enter a contract on ES or NQ. You cannot go 1.5 points. You cannot go 1.2, 1.3 contracts. You can't put 1.5 contracts in a trade. You can't do that. So, but that kind of makes it hard to get the exact risk you want. That's why we never trade on ES and we never trade on NQ. Instead, we want to trade on something called MES and MNQ. All right, so I have all these drawings. I'll get rid of these. Let's see this. Now this is MES and MNQ. The only difference, hold on. The only difference here is that instead, since we're on MNQ right now, instead of NQ being worth $20 per point, NQ here is worth $2 per point. That means we get more increments of how much we can risk, how much we get to risk. So let's say you want to risk $2,000, right? And you don't know how many contracts. Let's say your stop size is whatever, and you want to risk 1.5 contracts on NQ, not MNQ. and that's going to be $20 per point, but you can't risk 1.5 contracts. So you go on MNQ and you put in 15 contracts, because 10 contracts on MNQ is equal to 1 contract on NQ. And then 15 contracts on MNQ would be 1.5 contracts on NQ. So the reason, some people are like, oh, but I want to trade, I want to make more money, I want to trade on NQ, I want to trade on ES. It's not actually making you any more money. There's no difference. The only difference is it's worse, right? It moves exactly the same. It's the same, it follows the same index, moves exactly the same. The only difference is the increment that you can put your contracts in. So why would you trade on NQ? Why would you put in 1 contract on NQ when you could put in 10 contracts and get a more exact positioning of how much you want to put in? So that is the difference between NQ and MNQ, right? Now, we set up TradingView. Let's set up FX Replay. All right. So if we go to FX Replay, want to go here. Sign in. Let's see. I think I have a throwaway account. All right. So this is FX Replay. Once you set it up, completely free, just hit sessions. All right. So you want to go to sessions. You're going to create your first session. All right. This is where I do all my testing for my strategy to see what new stuff I could add to my strategy, what will make my strategy more profitable, stuff like that. Right. So what you're going to do when you learn the strategy, how do I practice it? Right. Oh, here we go. How do I practice it, right? It's going to be the 2 types of practicing in the market. One is with TradingView. It's called forward testing. What you're going to do, you're going to wake up early. You're going to wake up, you're going to get on the charts, and you're going to see the live markets. And you're going to watch the live markets, watch the candles, come back every 5 minutes, see if you get your confluences, and take a paper trade. So you want to hit buy here, then you want to connect the paper trading account, okay? So if you connect a paper trading account, it's all paper. I can enter right now. I won't be scared of losing any money because it's all fake money, right? Obviously, I can't enter because the market's closed, but you get the point. So paper trading, forward testing is when you're paper trading with live markets. Okay. So you have that. That is going to be one version of how you're going to practice the strategy once you learn it. Another way to practice strategy is with FX Replay. It's called backtesting. Now, backtesting is when you're replaying chart data. So if I do test, and let's say I'm practicing to pass 100K account eval. So I would put in 100K balance, and I would put in, so instead of NQ, because NQ is what we should be practicing with, it costs the pro plan. You need the pro plan to get the futures contracts, right? But instead of that, you could just put in NAS and you will get the same, it'll be the same index that is replicating. There's virtually no difference. You're not going to have any of these yet if it's your first time. These are just chart layouts, like chart colors, stuff like that. And that's going to be your select your chart layout. You got your NAS 100, that's the thing you're doing. And, if you also want to practice the S&P, you can put the S&P 500 also on there. Right here. And then you want to choose a date. Now I choose random, but for you, I would recommend, since you guys haven't backtested any data yet, choose a year from 2019 to 2025. So here I'll just choose 2023, for example, and then start with January, right? Start with January 1st at 9:30 a.m. Boom. Boom. All right. 9:30 a.m. Add a month, and this is going to be the dates of time that you're going to be testing in the market. So let's create this session and let's see how to actually work FX Replay, right? Now, your chart colors aren't going to be the same again. There's going to be a different layer. It's going to look a slightly bit different, but that's just the difference with the colors. Now, what you're going to do now is you're going to play out the strategy. So what time are we at right now? We're at 9:30. I know I'm blocking it, but we're at 9:29 and 59 seconds. We're right before market open. It's perfect. You want to make sure you're on the right time zone by clicking the UTC button at the bottom right. And then you're just going to go out and play out the strategy. So how do I do that? I'm going to go here. I'm going to do my analysis. You'll learn this all, the actual strategy later. And once you're ready to move forward in the day, once you have your bias and everything, just click forward the next 5-minute candles, which I'm not seeing. Hold on. Yep, we had a gap. So here we go. We're just going to click forward the next candles. And then let's say, okay, I see some sort of entry. All right. So I'm bullshitting right now, but let's pretend we see an entry over here, right? We're going to if we have a long or a short position, we're gonna go over here. Gonna find out long. You can favorite these to get them on a taskbar like this. So if I see let's say I'm taking shorts, right? I take shorts right here. Choose whatever you want to target. Choose wherever you want to put your stop loss, and then you have your position laid out, right? And what you're gonna do, let's put the magnet on. What you're gonna do now is you're gonna click on your position. You're gonna click it, and you're gonna hit place order. Okay, once you hit place order, you're gonna choose how much to risk. Now, risking is important. We're on 100K. I recommend risking 2% or 1%. TGR said his strategy was to risk 2% until he lost, and if he lost, he risked 1% until he wins, and then back to risking 2%. But for us, let's just start simple. We're just gonna risk 2%. We can get into risk management strategy in a separate video. This is just the foundation, setting shit up. We're always gonna choose market order on FX replay because we want to enter where price is right now. We can get into the different type of order types in another video or maybe later today. So we have that. We have how much we're gonna risk, our risk percent, the amount in dollars, the entry price. Don't worry about this. Don't worry about lot size. It's just because we're on the Nasdaq and not on Q. And then your take profit stop loss, it should be already set. We can get to partials later when we talk about risk management, but this is going to be essentially what it looks like. Then you could go to the 1 minute, you could hit play, you can move it forward, make it go a little faster, and you can see this is going to replicate the markets on that day. Whatever strategy you're testing, if you hit take profit, if you hit stop loss, whatever happens. Obviously, this was a random gamble, so I don't really care if I hit whatever. And that's just going to show you. So here, I'll just keep playing it until it hits my stop loss or my take profit. I'll go forward 5 minutes. Let's see. There, so we hit our stop loss, right? Once you hit your stop loss, you can see over here, you lost $2,000, or if you hit your take profit, it'll say plus $2,000. You can always cover this if it messes with your psychology or anything like that. And yeah, that's where you're just gonna see your profits. Now your goal when you're trying to pass 100K eval is 6 grand in a month. All right, 6 grand. You guys got that. Once you guys master the psychology, the rules, and everything of this course, then you'll be fine to hit that 6 grand every single time, right? So it's going to be 6 grand without losing 3 grand in the process. All right, so that's FX replay. That's how you set it up. You can go check out your analytics when you click analytics right here. You can see obviously we only have one trade, so we don't have that much analytics, but you can see this stuff, is really not that important. If you're journaling, you can journal your trades and it'll be a lot easier to just look at what you're doing. I have a journaling app. It's in my resources in the Discord. You can check that out. But yeah, so let's move on. We messed with back testing, forward testing, and now let's start with some time frames and candlestick anatomy. Alright, this is where we get to the real meat of day trading. Alright, this is where we're starting the technical analysis. Okay, so we're gonna launch TradingView. Alright, so if anyone wants, these are my chart colors. Right now, I'm just going to change them so it's easier to understand. Alright, so we have green means up, red means down. Yep. So let's take a look at what we have. I'm going to turn off my indicators and everything is going to be normal. So starting off, we have time frames. What are they and how did they relate? So the entire The entire strategy is based off of the theory of smart money. Smart money meaning that institutions like JP Morgan and big institutions, banks, hedge funds, they're the ones controlling the market and manipulating retail traders, right? What how does that relate to time frames? We're going to take a look right now. So this right here, you're not gonna have a bar like this. It's just gonna be one thing, and then you can have a drop down. You're gonna want to favorite the time frames I have here. So I'll let you guys do that. And once you favorite those, we can start talking about this. Now, once you're on the 5 minute time frame, what does that mean exactly? Each of these are called a candle. All right. Each candle represents 5 minutes of the Nasdaq, of the micro Nasdaq futures, right? The E-mini futures. Now, what does that mean? How do we read a candle? We're gonna take a look right here. So we're gonna run into candlestick anatomy. But first, just one more simple thing, one more overview. We have these different time frames. If I go to the daily, this candle represents an entire day. If I go to the 4 hour, this candle represents an entire 4 hours. This candle represents an entire 1 hour, so on, etc., etc. Right? Now let's talk about what a candle is and how do we read a candle. So I'm going to draw a little candlestick right here. It's not going to be anything fancy, just a little drawing right here of a candlestick. We got this. Let's make this white. There we go. And let's get this filled in. All right, perfect. Now we have our candlestick anatomy. When you look at a candlestick, you want to understand there's two parts to a candle. All right, there is the body and the wick. Now the body is going to be this, solely just the square part, well, the box, the rectangle, right? The wick is going to be the line that goes right through it. Now, what do they represent? There's four things you can see over here. OHLC is open, high, low, close. Okay? So when you're going up, when you have there's two types of candles, a green candle and a red candle, there's an up candle and a down candle, right? It's up and down. So an up candle means that price opened at a lower price and closed at a higher price, meaning in that time frame, so let's say this is a 5 minute candle. In that 5 minutes, price opened at a lower price and closed at a higher price, right? Now, what does that mean? What does that tell us? It tells us that price moved up, right? That's all that's saying. That's all the open and close tells us. Did price move up? If the close is higher than the open, it moved up. Now, we can see that in a green candle, the open is always going to be the bottom, and the close is always going to be the top because price moved up. Now, the H and L, the high and low, is represented by the wick. We're going to see that here. In that 5 minutes, the highest point was this wick right here, right? And fuck, who calling me? Yo, Ryan calling me. Yo, Ryan.
Okay.
Ryan.
Yeah, what's up?
Yo, I'm recording a video right now. Say hi to the video.
What's up? Are you recording a video?
Like right now, yeah, I'm still recording.
Wait, would you wanna
you just made the video.
set up the stuff today? Or no?
Yeah, we can set it up. I'm
Yeah.
I'm like in the middle of the video. They're going into the video, by the way. It's going. I'm not cutting this out.
That's true.
Yeah.
Wait, what time do you think we'll finish?
If you want, you can pop out right now.
It's never mind. It's fine. I'm going to dinner for Father's Day. I was gonna.
Alright, word.
You can come later. Like we'll probably be done by like I don't know, 9:30, 10.
Alright, word. Let me know. Alright, say hi to the viewers though.
Hi, Mr. Viewers.
Yeah, they're about to be hella profitable now, right?
Yes, sir.
Hella profitable. We'll talk about candlesticks.
Huh? Actually?
Yeah, we're on some candlestick anatomy. Yes, sir. Alright, peace out. Yo, that was my boy Ryan, one of my students, profitable, 100K eval, getting his first payout. That's what we like to see. Let's continue. So, like I said, there's two parts. There's the body that represents the open and the close, and the wick that represents the high and the low. Now, in this 5 minutes, the top of the wick represents the highest point in price, and the bottom of the wick represents the lowest point in price, right? Now, we don't know what happened first. We don't know if it made the high first or it made the low first. So we don't know if it went if it went a little something like this, open, high, low, close, or if it went something like this, if it went open, low, high, close, right? We don't know which way, but we know that the high was made there, the low was made there, and the open and close was made there, right? And now let's talk about a bearish candle. You guys can probably figure out that a bearish candle looks very similar, obviously. Let's look at this. But the only difference here is that the open is at the top and the close is at the bottom. Because why? Price moved down, so the price closed at a lower price than it opened. That's all that means. And same rule applies. Open, high, low, close. Or we have an open, low, high, close, right? We don't know what happened. We just know that it made this high, made this low, and it closed here, and it opened here. Those are the 4 things that a candle tells us. And now let's get into some highs and lows, legs up and legs down. And then we're going to call it for this video. Next video coming out probably the same day. And we're going to finish unit 2 in the next video, right? So let's take a look at what a high is. Now, I want you to make a hypothesis of what you think a high is, and just think of what you think a low is, and just forget about it. All right, everything you just thought of, all that BS, just forget about it. All right, never mind. Yeah, so just forget about all of that, because you're wrong, you're incorrect, and you're a dumbass. But I'm right, I'm correct, and I'm profitable. So what we're going to do is we're going to discuss a high and low as it is just a candlestick pattern. It is a 2 candlestick pattern. So let's start with a high. First things first, when you're identifying a high, is you're going to look for 2 of these candles. Okay, you ready? You're going to look for a candle up, a green candle, then a red candle. It is that fucking simple. All right, a high is going to be a move up and a move down. So an up candle, then a down candle. All right, so green candle, then a red candle. That's all we're looking for. So let's look at this example right here. Right, this is an up candle, then a down candle. Perfect. How do we mark that out? Now the high, that's step 1 of finding your high. You want to see that 2 candlestick pattern, an up candle, then a down candle. Then you're going to compare the wicks. Since you're looking at the high, you're looking at the highest point between these 2. So which point is that? It's going to be this one, because this wick is taller, right? So we're going to take our horizontal ray, and we're just going to put it right there. That's how you mark out a high, okay? Now, if you can't find the horizontal ray, it is over here, right under here. It's going to be over here, the horizontal ray. Now, what you're going to do right now, pause the video, and you're going to mark out 3 highs, all right? And step 1, find an up candle, then a down candle, in that order. Step 2, figure out which wick has a higher point. Step 3, mark it out with the horizontal ray. That's what I want you guys to do. And now we're going to, once you guys are done with that, let's talk about lows. Now, lows are literally the exact opposite. You're going to find a down candle, a move down, then an up candle, a move up. So red, green. All right, so we see that right here, a red and a green. And similar to the high, we're going to look at the lowest point between those 2. So we have the lowest point is right here. Mark it out with the horizontal ray. This is the low. Perfect, right? So let's do a few more. We have down, up. All right, we got the lowest point between the 2 is right here. So we mark it out like that. We got up, down. We got the highest point between these 2. It's right here. Mark it out just like that. We have up, down. We have the highest point between the 2 is right here. Let's mark that out. We have down, up. We have the lowest point between the 2. It's right here. So we have low, 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 high, 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 right? That's simply how you mark out a high and a low. That is the most simple thing you'll get. If you didn't understand that, get the fuck out of here because you're a failure. Now, moving on to the legs up and the legs down, right? We're going to talk about what is a leg up and what is a leg down. How we do that is we have to take what we learned from a high and a low, and we have to apply that here. So, what is a leg up? We're going to start with a leg up. A leg up is simply everything between a low to the next high. All right? So, a low to the next high. Every candle in between the low to the next high has to be the same color candle. So, how you're going to mark it out is you're going to use something called the Fibonacci retracement. All right? We don't have to look into that right now. So, actually, to make things simple, all you're going to do is press Alt Shift R and you're going to get your rectangle tool, okay? So, I'm just going to make this super transparent. I'll just do this. Or fair value gap, sure. Okay, so what you're going to do, you're going to take out your rectangle tool and you're going to mark out from choose a low. So first off, find a low. So what are we going to do? We're going to use this. Move down, move up. Lowest point is here. We're going to mark it out with this tool, just like we did before. And then look for the next high, okay? So find a low on your chart, then look for the next high. The next high is right here. Get your horizontal ray, move up, move down, highest point, like that. Perfect. Now, just like you did that, grab your rectangle tool, and then you're going to click on the low, and then you're going to click on the high. That is how you mark out a leg up. This is the leg up. All these green candles in between is the leg up, right? Now, you wouldn't do that with a rectangle tool. When I'm trading, you're going to use something called the Fibonacci retracement. Yours isn't going to look like this. We can change those settings later, but we mark out legs up like that and legs down to make these to use these levels as key levels. Now, a leg down is, as you can guess, literally the opposite. You're going to choose a high and then look for the most recent low after that, the next low. All right. So choose a high, then go to the next low. So right here, I see a high, move up, move down. We got the choose the highest point, the wicks, boom, right there. And then the lowest point, boom, right there, bang. And then what you're going to do, you're going to grab this, your rectangle tool, click on the high, click on the low. Boom, that is your leg down. You would do that with the Fibonacci retracement, but for now, since you're practicing, just use the rectangle tool. All right. So bang, those are our highs, lows, legs up, and legs down. All right. So next video, we're gonna hop on the 3 market conditions. We're gonna start talking about some liquidity. Actually, liquidity is gonna be its own video. Yeah. We're gonna next video we're gonna talk about liquidity, smart money concepts, and all of that. The video after that we'll talk about some market conditions. We're gonna talk about what is a funded account. We're gonna talk about what the goal is, and then the next video after we'll start talking about fair value gaps and stuff like that. Alright, yo, bang. That was a chill ass video. Pull up description. We got the Discord. We got the course videos. You're gonna hop on that. Send the application. Follow the Instagram. All that good stuff. And yeah, y'all better be profitable. Peace.